In New York, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, Apple earnings, they're out. iPhone sales fell in the period, but its bet on services seems to be paying off. Plus, Facebook puts its best foot forward at its F8 Developers Conference as the social network shifts its emphasis to private communication. We'll speak to the Vice President of Facebook Messenger. And Alphabet turns in its worst performance in terms of share price in 7 years on fears that advertisers are shifting some spending to digital rivals away from the search giant. But first, to our top story. Of course, it's Apple. Shares rising in after-hours trading. They're up nearly 5% on the company's second quarter earnings report. And the iPhone maker is continuing its transition to a services company, with revenue in the category reaching a high of $11.5 billion. Now, remember that Apple's launching a plethora of new services like streaming video games, improved news subscription. And still, its biggest revenue driver, though, remains the iPhone, which saw demand stabilize to $31 billion. But that's still a drop. And remember, it disappointed significantly in the holiday quarter. For more on these results, I want to bring in from Cambridge, Massachusetts, where Forest Principal Analyst Julie Ask is with us. Julie, I'm so interested by these numbers because share price is big movement after hours because it was a beat. We got to remember, yes, they're beating on their earnings per share, they're beating on their revenue, they're giving us a bigger dividend and share buybacks, but these are still falling revenues, falling earnings per share, falling iPhone sales.
Sorry, it sounds like another boring quarter for Apple. No, I mean, I think, they continue, right? It's sort of like it's the same news every quarter. No, but, more seriously, I think the things that you can look to that are very strong is their installed base continues to grow, service revenue continues to grow, and so it's still a very strong story for Apple, despite all that.
Okay, so talk to us about the real strength. Is it all about the fact that services really is starting to grow? They call it a record quarter in terms of the services number, $11.5 billion.
Yeah, so I think, we'd expect to continue to see record quarters. And I think also, while the hardware business is still the core of Apple, a lot of the upward growth is still going to have to come from services. There isn't a next IT device. There isn't the smartwatch or the HomePod or something else that I have to have. So we're still, to a large extent, relying on the smartphone and smartphone upgrades. But then a lot of the growth is going to come from services. And I think that's where you're going to see more revenue per consumer as we look forward.
And they're talking of their installed base being, 1.4 billion users. I mean, is this enough? Do we worry in any way that base might erode when we have such competition in the high-end device area, such as Samsung, such as Google's Pixel, such as Huawei, for example? Or do you think that they are so integrated that they keep that user base and the services really does then the heavy lifting?
Yeah, so I do believe that Apple tends to have a very loyal base of consumers. And I think, what's difficult here is you can't parse out that 1.4 billion. So as a consumer, as Julie, how many devices do I own versus how many new customers are they bringing into the Apple ecosystem? Because certainly the value of the services and the value of the devices goes up, the more devices that I own. And so both of those numbers need to continue to grow for Apple.
Okay. Some of the interest, of course, from this results was going to be focused on China because they tried to a certain extent, blame all of their problems on China, particularly the falling iPhone sales. Once again, China is a weak point. We're seeing down about 22%, I think, in terms of year-over-year sales. How much of a worry is it that China seems to be not quite the growth focus it had been?
So I think it's always, it's somewhat of a concern because it's the largest market in the world. Certainly there's a very strong competition from the local players in the Chinese market. But bigger picture, when we look at where new smartphone sales are coming from, they're going to come from economies like China and India and Indonesia and Nigeria and other large companies. And it's going to be harder for Apple to compete at their price points versus some of the local players and some of those in the Android market.
So
it's always going to be a tough road there.
And what about, Julie, as much as it's not potentially the fundamentals at play here, but we do look at them giving more cash back to the investor base. They're doing more share buybacks, bigger dividends, but they still got an enormous cash pile. How do you want to see that put to work?
Yeah, so not being a financial, advisor or an analyst, I probably am not the right person to say how they should put that to work. But I think, if they had better product ideas. And one of the other things I would say, right, because the next thing would be the services. There's only so much money that you can put at services because really there's a lot of dependency both on developers to create services on top of the platform. And there's a lot of runway for developers here to go. And then they're also very dependent upon their ecosystem partners, like signing up more partners within the payment ecosystem, getting more content. And so it's not as if they can just throw more money at services and magically make that number grow. They're so dependent on their partners to do that, unless they make some very different decisions about content and so forth.
You're right. And it's interesting, we're hearing from Tim Cook on the call at the moment. In our T-Live blog, which is a Bloomberg offering that shows all the latest news coming out of the call, Mark Gurman reporting that Cook is out with the superlatives, calling the iPad quarter was a blockbuster and praising the Apple Watch. But notably, he's saying the company's culture is that of flexibility, adaptability, creativity, and long-term thinking. Is Apple, at its very core, adaptable enough, flexible enough to decide it's a services company over and above a hardware company?
So I would say, given their track record to date, I would say the answer is yes. I think they're also in a position that, you could say is similar to some of the other large hardware manufacturers. And if you would compare them to some of their largest competitors, I would even argue that they're further ahead in the services space for a company that's still generating the vast majority of their revenue from hardware.
Great perspective coming from Forrester's Julie Ask. We thank you very much indeed. She's going to have more for us in Apple later in the program. Coming up, Facebook wants to be your go-to place for messaging. Well, the social network unveiled to make that a reality at its annual F8 conference. That's next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and of course in the US on SiriusXM. This is Bloomberg. Facebook is doubling down on a successful but controversial part of its namesake app, messaging. On Tuesday, the social network unveiled a redesign that focuses on its groups feature, another sign that Facebook is moving towards more private, intimate communication. Here is Mark Zuckerberg discussing one of its newest additions to messaging.
We need to make sure that the service is available everywhere that you are. And for a modern messaging experience, that means having a great desktop experience. So we've built a great new desktop app, so you're going to be able to chat and video chat in a native app, not just the browser. And we are launching this on both Mac and Windows. And this is one of our top most requested features.
For more, I'm very pleased to bring in Stan Chudnovsky. He is VP of Facebook Messenger. He joins us now from San Jose from the F8 event. We spoke all the way back in the Web Summit years ago. Wonderful to speak to you again, Stan. And talk to me about what really excited you about the Messenger announcements today at F8.
Well, we announced a couple of things. We announced desktop app, and you just played that clip. We also announced ability to actually watch videos while you're in a group video chat with other friends of yours. We also announced the thing that we are going to be rolling out later this year called Friends tab, where all of your close communications with friends and family are going to go to, and you will be able to have status, you will be able to have stories, all of that's going to be right there. So we're kind of been busy during the last year redesigning our app, and we're going to continue to be busy going forward. One thing also to say about the privacy part of that, we're just looking forward to be even more private than we ever have been before, with end-to-end encryption and working with stakeholders all over the world about figuring out the right ways of doing it and rolling it out eventually to our users worldwide, as well as interoperability, when you will be able to actually send messages from WhatsApp to Messenger and back and forth.
When will that be a reality, do you think, Stan?
Could you repeat the question, please?
When do you think the interoperability between WhatsApp and Messenger will actually be a reality?
That's actually going to be years. And the reason why it's going to be years is just because it's going to take us a long time to figure out the way to do it right. When it comes down to encryption, we need to figure out a way to do it right. That will require us to consult with many different constituencies out there. Safety advocates, privacy advocates, governments, policymakers. That's going to take time to get it right. We don't have all the answers right now, but once we do, then we will be able to spec it out, and then we're going to be able to have the timelines.
Okay, so years for that particular merging. What about what is available right here, right now, in terms of business and the person? You talk a lot about how Messenger is being used within families, within friendship groups, but it looks as though you're focusing squarely at the enterprise as well. How are you looking to make money off of that?
So we're definitely very excited about our business ecosystems that is emerging around Messenger. Today we have 20 billion messages that are being sent between people and businesses every month. And what excites me personally the most is actually not the number, but the trajectory. A couple of years ago when we announced our first number, it was 2 billion, and then we said 4, and then we said 6. Just 6 months ago, I think in December, I was in New York, and I announced that now we have 10 billion, and today we are at 20. So the speed of growth there is very fast, and one of the reasons for that is just simple fact that people want to message to businesses. They want to communicate with businesses the same way. They're communicating with other friends, and so they don't call necessarily anymore. They don't necessarily prefer emails. They prefer messaging. We are pretty certain that if we are continuing... Go ahead.
Will you charge businesses for this?
Could you repeat the question?
Will you
Sorry,
charge businesses for this? Would you charge them? How would this earn you money?
Yeah. So the way we would charge is that through ads. We are in ads business, and today one of the fastest growing products actually at Facebook is click-to-messenger ads. And the way that works is that it's a simple ad, but the call to action for people is message. Once you tap on that, it opens up a thread between people, between person and the business, and then business can have that channel of communication with their customers. For that, you definitely have to pay because you're buying an ad. And that's how we are making money today.
Interesting. Would you look to make money in different ways going forward from Messenger? What are the ways in which that you can really make the most of being so integrated between the customer and the enterprise?
Well, the way we are thinking about it is that we need to focus for now more on two things. One, building products that people really love and enjoy using, and second, building that business ecosystem where we enable people to talk to businesses and continue to grow that ecosystem. Once we figure these two things out and do that very well, we are pretty confident there's going to be plenty of ways for us to make money. But Facebook Mojo always was about building products for people first before go deeper, and that's what we're going to do.
Talking about building products, a few years ago at F8, the big talking point was bots, how that was going to be integrated within Messenger, how they were going to help. How are bots helping today? Are they being rolled out in the way that was originally envisaged?
We are excited about automation, and what we are experiencing right now are the experiences where people are sort of combining automated messages that are enabled by bots and human messages that are enabled by real people. And the most powerful experiences on Messenger today are those combinations. When you start a conversation with the bot, but once bot sort of runs to the end of its depth, then the person picks up the conversation, and then it can handle it even better than bot ever could. So those are experiences that are actually really enabling the growth of the platform today, and we are excited about them going into the future as well.
Stan, when we spoke before, you were over at PayPal, and PayPal and Facebook have a very strong relationship at the moment, it would seem, certainly when it comes to integration within Marketplace, when it comes to how Instagram in purchases are being used. How do you see that developing in terms of payments, particularly when we look forward to the way in which we'll see messaging being used to purchase various things, enterprise, businesses, relationships? Will it always be PayPal, or will Facebook look to build their own mechanism for payments?
No, we're going to work with everybody out there who will enable our users to be able to transact seamlessly with merchants of their choice. And so we want to have as many partners as possible, and PayPal has been a great partner for us, but it doesn't mean that in any way, shape, or form it's going to be ever exclusive.
Stan, always great to get your time. We thank you very much indeed. From a noisy F8, Stan Chudnovsky, Facebook Messenger VP. Thank you for joining us. Now coming up, Huawei exposed. Could Vodafone have found the evidence the US wants to get its allies to ban the Chinese telecom manufacturer? We take a look next. This is Bloomberg. Now, could opponents of Huawei finally have the smoking gun that they need to ban the telecom company from future 5G networks? Well, one thing's for sure, they have another weapon in their arsenal now, because Bloomberg has learned that European mobile company Vodafone has found vulnerabilities in Huawei equipment going back as far as 2009. And these flaws may have given the Chinese telecom giant unauthorized access to Vodafone systems. To discuss, next bring in Bloomberg Tech Joshua Brustein. Joshua, your take here, because it feels new, because Huawei has always said there is no evidence for the fact that we are in any way able to spy, use backdoors and the like.
Absolutely. As the controversy over Huawei's role in potential Chinese espionage has grown over the last couple of months, the company has consistently said this is all implication. There's nothing you can point to where there's been an actual vulnerability. And what we have here is evidence of an actual vulnerability that was discovered and persisted even after it had been brought up to Huawei for some time.
And it seemed to have been particularly in the Italian part of Vodafone. And this is what the real worry is, that they said to Huawei, look, we found these vulnerabilities, please can you fix them? And their response wasn't immediately that helpful.
Yeah, I think this is the part that's most potentially damaging. Vodafone said to Huawei, you know, there are these vulnerabilities here, can you please fix them? Huawei both said, yes, we'll fix them, and then when tests were carried out, they were still there. And then Huawei at another time said, oh, these are required for some sort of manufacturing reason. So it seemed like an unsatisfactory back and forth.
And just remind us what so-called backdoors allow, and sometimes how companies need them, or indeed perhaps accidentally on purpose have them.
Sure, so a backdoor is a way to access a system. There are reasons you would want them, say if you want to do maintenance or something, but also obviously once you create one, other people can access them, and in some cases the implication is they were set up specifically for that purpose.
And I think what's really interesting is Vodafone's response here. We've also had, of course, Huawei's response where they say there is absolutely no truth in the suggestion that Huawei conceals backdoors in its equipment. But Vodafone, even having found these weaknesses, even having had to ask repeatedly Huawei to fix them, they're still using Huawei. They're still integrated in their 4G, and they're still not asking for them to be banned. Why?
Yeah, this is the really interesting part about the politics of Huawei. As you said, Vodafone knew about this and continues to work with Huawei, is not pushing for Huawei to be banned. And the fact is that Huawei provides products at a cheaper price point. And even if you don't want to buy from Huawei, to have Huawei bidding on projects allows you to get a cheaper price from, say, the other company you want to go for. So the carriers, are really kind of they're kind of torn about how they feel about Huawei here.
And certainly when they have to build out the 5G infrastructure, and if you're having to tear up your 4G, that would be pretty difficult.
Exactly. Great
to get your expertise on this story. It's a wonderful scoop coming from Bloomberg. Joshua Brustein, we thank you. Now, Alphabet has tumbled the most in 7 years in its share price after first quarter revenue missed analyst estimates. Now, the earnings report also sparked fears that advertisers are shifting some spending to digital rivals away from Google. Joining us to discuss, Bloomberg Technology's Garrett DeVink. What a move in the share price.
Yeah, I mean, I think the most since 2012, so pretty significant drop there, of course. Now, to be clear, Google is up still this year, up about 13%, but obviously investors are pretty upset.
And they're worried because there seemed to be a lack of clarity, right? We heard the blamings of why revenue was down, the FX and new product rollouts, but when asked repeatedly by analysts on the call, it seemed as though CFO Ruth Porat didn't really have enough transparency.
Yeah, I mean, there's always been issues with transparency when it comes to Alphabet. Of course, people want YouTube broken out, they want cloud revenue broken out. The company is sort of just ignored those calls for years now, and they're Alphabet. I mean, they can do that. But that, I think, definitely compounded some of the revenue growth problems for the company. People wanted a reason. They want a story to kind of go to their clients and say, okay, this is why you shouldn't sell the stock. But because there was none of that, people pulled out of the stock.
And I think it's also a concern when clearly in this quarter, Facebook did really rather well, thank you very much, and some of their rivals.
And the market itself is kind of static. And so when one does well, you have to think, okay, where's that money coming from? And of course, Amazon is growing its ad business, still quite small when it compares to Facebook and Alphabet, but it's growing quite quickly.
Was there any key concern, particularly to do with YouTube, given the backlash that there has been, certain advertisers worried about the content that they're seeing next to?
Yeah, I mean, I think that is one of the sort of leading theories, and it's difficult to say because on the one hand, there are some very serious advertisers that have paused their spending, that are still paused. I actually just was speaking with an ad agency executive who said, his theory is that is actually making a bigger impact than some people are actually saying. But, then Google should come out and say that and say, that's a short-term loss because we're trying to make our platform better. And they were not that clear.
It's interesting, we've had some announcements after the bell from Alphabet, not just Apple, and Alphabet changing up its board somewhat. Talk to us about the departure of Eric Schmidt.
Yeah, Eric Schmidt is now officially off the board, and he of course was CEO for a long time. He was intimately involved with the company, in the last 15, 20 years. Lately, he really hasn't been. He hasn't sort of been at the front and center. He might have been doing some kind of back channel, helping Google dealing with the government and dealing with some of its thornier issues, but he was definitely not playing a public role for some years now, and I think this sort of just formalizes that. I wouldn't necessarily read too much into this announcement, and Eric Schmidt is someone who is also interested, not necessarily running himself, but being maybe a little more vocal about politics, and with presidential election coming up, that might be one theory why he wants to distance himself further from Alphabet.
Fascinating. Garrett, always great to get your take on a day such as today. Bloomberg tech reporter Garrett DeVink with us. Now, coming up, we continue our coverage of Apple's results. The earnings call is underway. CEO Tim Cook says, look, November and December were the most challenging months for iPhone. And later, we're going to be talking about 3M's uphill battle. The stock got multiple downgrades and target price reductions Friday after a grim earnings report. Highlights from our exclusive interview with 3M CEO. That's Michael Roman. This is Bloomberg. Technology. I'm Caroline Hyde in New York. Now back to our top story, Apple's rebirth as a services company. While demand for the iPhone and the Macs might be waning compared to the second quarter of 2018, we can see that the company is making gains in not just its new focus as a services company, but also with its wearables like Apple Watch and, get this of course, the iPad doing pretty well too. Now, on the earnings call, there were of course some concessions from Cook that there were global headwinds in the period.
We did experience a revenue decline in emerging markets, but we feel positive about our trajectory. Our year-over-year revenue performance in Greater China improved relative to the December quarter, and we've seen very positive customer response to the pricing actions we've taken in that market.
To discuss in Boston is IDC's VP of Worldwide Device Trackers. It's Ryan Reith. Also in Boston, just across the river, is still with us, Forrester Principal Analyst Julie Osk. I'm going to start with you, Ryan, because, well, China's improving, but sales are down 22% instead of 27%. It's not pretty. And at what point do you think China might stabilize?
Yeah, so overall, it's definitely not pretty, and I think that we've got some tough times ahead, to be honest. I think we're looking at basically 2020 as sort of the beginning of the real recovery for the overall market, and that's pretty much around all of the device markets that Apple plays in, as well as obviously their services business, which is sort of growing to the center of attention pretty quickly beyond iPhone and other things.
beyond iPhone and other things, and beyond is where they potentially could put some cash to work. Julie, we talked about its cash pile previously. We're getting clarity on the call coming from Luca Maestri, who is the CFO, saying that Apple had $225 billion in cash in the end of the quarter, net cash of $115 billion. They can invest confidently. Where would you want them to invest confidently?
Oh, that's a very hard question. If I knew the answer to that, I'd have a very senior position at Apple. But no, more seriously, I think, what's hard here is you can't just throw money at the challenges ahead of them. There isn't that next it device. They can spend money on marketing to drive demand and to support developers to create more services to try to get to that next it device. But like I said, it's also hard in the services market because they're so dependent on ecosystem partners. So the growth there, while it's very scalable, it's also very hard won.
Now, Ryan, talking of it devices, a sort of stealth it device to a certain degree has been the AirPods. I mean, I'm actually a Google Pixel phone owner, but I use AirPods with them. And clearly we're hearing on the call that wearables had a very strong performance. AirPods, apparently the interest was off the charts, according to the CFO, and they're working hard to catch up with demand. They can still make it work on hardware when they want to.
Yeah, absolutely they can. I mean, you'd be a fool to rule Apple out of any of these businesses, right? I mean, in terms of hardware. So there's no question they're dominating the wearable market, whether that's AirPods, whether that's Apple Watch. I mean, they're owning basically the majority market share in both of those categories. So let's not overlook that, and clearly they're highlighting that, right? And I think as Julie sort of mentioned on that last segment right there, is that going into the service business, we all talk about this because that's a shift for the company, but it's not an easy play, right? They're going to have different competitors, people that have been investing in areas that maybe they haven't as significantly. So they've got challenges ahead, but it's not to say that anyone should actually rule them out by any means.
And talking of other new sort of hit desires, it seems as though the Apple Card has been terrific thus far, is what Tim Cook has been saying on the call. And Apple Pay transactions as well, expected to top 10 billion by 2019. Julie, how much is the fintech angle of Apple overlooked or a future area of growth?
Yeah, so it appears to be a strong area of growth. I think the open question here is just one, like how much revenue will it continue to generate for them? I do believe that some of the early deals that they signed may have expired. They need to continue to grow their ecosystem, and it's got to be, if it's going to replace something like cash or a credit card, I have to be able to use it everywhere, and that includes like transportation systems and other places where I want to spend money, but I don't want to get, right, there's this recurring payment, but I don't want to get out a credit card or have a separate pass. So there's a lot of runway there for Apple, but it's also a slog. It's hard work.
It's hard work, it definitely is. And Ryan, in terms of, it's also hard work to recreate a juggernaut in hardware space to become a services business. Do you think thus far they are succeeding in their reorientation? And at what point will they ever become predominantly a services company?
Yeah, well, to the last part of the question, I don't know exactly when, and I think that's the million-dollar question, or yeah, I guess we could say trillion-dollar question, right, with everything that's going on today. But realistically, I mean, these guys aren't done with hardware by any means, right? So we're obviously, we haven't even talked about iPhone, which is the first, I think, earnings, one of these types of briefings that I've been on where we haven't actually really dug into that. But it's, again, that's a product that's not done by any means, right? It's still holding 15% market share of, the entire segment and so forth. And it's going to still, make some revolutionary gains. But they have their challenges ahead. And again, it's changing times on both aspects, both the services and the hardware side.
But Ryan, to that end, the iPhone isn't done. But how do you see the price point maturing? Because we're seeing, interestingly, Samsung offering yet even more expensive phones with the foldable one, which has been a slight disaster in terms of its launching into the market. But on the downside, we are seeing, particularly in China, the likes of Huawei, the likes of Samsung eroding some of their market share. How much do you think that they need to go down the price point value chain, or is that never a good idea with Apple?
Well, I guess they're not going to go down to the areas where Huawei and Samsung and Xiaomi and all these others that they're playing really to support their market share, right? Apple's never going to go that low in terms of price point. I wouldn't be surprised, and this is just some speculation, if we do see another sort of go at it with a lower cost iPhone, but that's probably going to be into next year. And keep in mind, again, this is still the cash cow. They're not going to give up on this. They're looking at all the market dynamics, but as you sort of said, they can't go all the way down to the bottom. But I think that they're realizing that there is a market need for whether that's a $500 to $600 iPhone or something like that. Who knows what the price point is, but probably something lower than the $1,000 plus stuff that we're seeing from traditional phones. And then obviously Samsung, as you mentioned, is getting into that $2,000 plus, and Huawei is going to follow pretty soon.
Julie, to that end, we're seeing perhaps Apple deploying a different kind of tactic in terms of price by offering trade-ins. And Tim Cook has been saying iPhone trade-ins in stores are 4 times up year over year. Is that the way in which they're going to do it, by offering certain clever ways to cut prices in certain geographies?
So I think, yes, on one hand, they can throw money at this by doing buybacks, lowering prices, and they can do some of that. But the other road, and the road that I see Apple preferring, is actually to give to create value on top of that platform. And there's still other areas we've talked about, or we haven't talked about so much, like AR and VR and iMessage and other groundwork that they're playing that will allow third parties to build services that make the iPhone even more compelling, or some of the devices in their ecosystem even more compelling to consumers. And I would expect this, while the money might be the near term, the longer term play is going to be to create platforms that allow third parties to generate, to create value on top of those platforms and give the perception that it's worth even more money, even in the hardware space.
Well, for now, investors seem to be liking it. Shares up 5% after hours. Julie Osk of Forrester and Ryan Reith of IDC. Great to get both of your expertise from the East Coast. Now, coming up, Uber is attempting to put its best foot forward with investors ahead of its public debut. But is the tech IPO pipeline getting too hot? This is Bloomberg. Amazon aims for a $4 billion in additional exports from India by the end of fiscal 2023. Now, the company says total shipments from there have already reached $1 billion since the company started its global seller program in 2015. Amazon's now in a pitched battle with Walmart for the edge in India after the US retailer spent a cool $16 billion last summer to buy control of Flipkart, the leading local e-commerce operator there. Let's talk Uber now, because, of course, it's just kicked off its IPO roadshow, and it says it has demand for all its shares offered in the planned public offering next week. The ride-hailing giant will continue meeting potential buyers in New York and San Francisco as it seeks to raise as much as $9 billion. Bloomberg's Eric Newcomer has been hot on the heels of this IPO roadshow. It's in London Monday, today in New York. I mean, shock horror, they're going to sell all of the millions of but what price will they be able to sell them?
I mean, this is the kind of story where it's like we'd be upset if it wasn't the case, right? If they couldn't get in within their own range, 44 to 50, that would be troubling. The question is, at what price within that range, and then do they have to push it up because of it? But this is a good sort of first step, still early in the roadshow, to say, okay, there's certainly the demand to fill out this $8 billion to $10 billion raise that we're planning. And that's certainly a lot of money to Uber's credit. I mean, we can sort of roll our eyes and say Uber's always been able to raise a bunch of money, but it's still a ton of money at a pretty high valuation. So it's sort of a step in this process of getting the money together.
And the step that they're currently on is wining and dining, or coffeeing and watering over at key landmark hotels around the world. Where were you today?
I was sort of standing outside the Mandarin Oriental. I think they had sandwiches and pasta, not the beautiful hotel, not the fanciest of lunches, but yeah, hundreds of investors meeting with, Dara Khosrowshahi and 2 other executives to get sort of the first-hand pitch from the prospectus.
And who are these investors? Is it key institutional money that's coming in? Is it the big, the small, the everything in between?
Yeah, I mean, Uber has some sort of one-on-one meetings with the really bigger investors, and then this is sort of the range of, you can imagine everything from sort of pension funds, just all sorts of potential investors in New York, anyone who might sort of have money to buy in at a big enough check size.
And how much, it was interesting that I had a guest on in previous shows sort of talking about the excitement around the IPO pipeline, the fact that we've seen Pinterest on a great tear until today. But generally, some of these IPOs, Lyft excluded, have been going pretty well. But how much are they sucking oxygen out of each other, and how much when we have like WeWork deciding that it's going to come to the market as well? Are we starting to get a bit of a feeling that this is a mad dash?
Well, some people joke that WeWork really needed to make it clear that they were going to public to make sure that people saved money, for their eventual IPO. So I think, there's some concern about, okay, what about my IPO and the allocations? But to some degree, I mean, investors have seen these companies coming, and if anything, have been sort of thinking, oh, maybe they would have come earlier, and they had waited so long to catch up to their valuations. It still feels like this moment where everyone wants to get out at the same time. It feels like things are still working. Like you said, yes, like Lyft wasn't as well executed maybe as people would have liked, but I think, the IPOs are still doing pretty well, and so all these unicorns want to get out the door at the same time. It's pretty amazing.
Pretty amazing when the S&P 500 is at another record and the Nasdaq's not far off. No wonder that they're trying to come to the exit.
Exactly. They saw it coming. They were like, this is a good moment. We need to get out now. And everyone is, stampeding, to use that word, to go public.
And Eric, you're going to be day by day watching them tear through into the public markets. That's Eric Newcomer covering all things startups. Now, let's talk about 3M, which is already on the public market and fighting a disappointing start to the year. On Thursday, the stock suffered its worst loss in 3 decades. That's after revealing that its business is far weaker than investors had realized. 3M CEO Michael Roman told Bloomberg TV that the company is taking aggressive action to turn things around.
Q1 was a disappointing start to the year. We were impacted by several key end markets that we had been talking about even as we exited 2018. We saw soft demand in those end markets. That decline accelerated as we went through the quarter. Even as we came out of February, March, we just saw accelerated decline in those end markets. And we took actions to adjust for that. We weren't able to compensate for the decline we saw, and we just delivered, soft growth, I would say, relative to our expectations, and disappointing earnings in the quarter.
You were disappointed. Were you surprised? Did it raise any questions in your mind as CEO? Do I have the mechanisms in place to really monitor what's going on in real time?
Well, we didn't take enough action in the first quarter, and we've talked about that, and we are taking aggressive actions now. We are executing. We know how to do this. We know we'll lead into challenges like this. We'll lead out of them as well. And so our team's on it, and we are taking actions as we came out of the quarter and really aggressive actions as we go into the second quarter.
What are some of the aggressive actions? So some people are saying the fact that you bought back, say, more than $700 million of shares in the first quarter as the shares rose, perhaps that could have been deployed elsewhere.
Yeah, and we have a long strategy to share repurchases, and we continuously are in the market around that. But our actions are really around getting our operations aligned to the demand that we see, giving us a chance to continue to execute that value model, but adjusting to the demand softness that we saw. And so the actions are taking down costs, of course, aggressively taking down costs and how we operate, especially the businesses that are challenged, and then looking at our manufacturing. We're vertically integrated in manufacturing. We've got to adjust those production plans. We've got to be more aggressive in doing that. We've got to make sure we're managing our cash as we go through slowdowns in key markets. And then we announced some restructuring really to better align us to where we are in the markets in 2019.
As you looked at it, where was the biggest misalignment if you weren't aligned? Is it China? Is it automotive? Is it electronics? Where specifically did you see the biggest issue?
Yeah, the soft end markets, those are the 3 key end markets. It's China, automotive, electronics. That's about 30% of our revenue focused in those areas. And we saw a decline accelerate, as I said, as we went through February into March. And as you see soft end markets like that, the distribution channels that you work with, they also react and they take inventory. So it gets multiplied as you go through the quarter. That tends to get back in line. The channels adjust quickly. But as we go into the second quarter, it now becomes a story about what is end market demand going to do in those areas. And we're positioning ourselves with our actions to be ready to lead back out.
Are you changing your supply chains at all?
We have global supply chains. We have a strategy to be close to our customers around the world. This has served us very well. We've been in markets like China for more than 35 years. And this is part of our strategy to be close to customers. We adjust as needed, but we have a lot of flexibility in our supply chain to make the kinds of changes that I'm talking about and be in line with the end market demand.
As you go through the entire operation and you take costs out and become more efficient, how do you make sure that you don't undermine your ability to deliver as things come back?
That is the big challenge in adjusting to these kinds of situations. It's not simple across the board kind of cost cutting. You have to be focused. You've got to be aggressive because you've got to get in line. We've got to deliver. It's one of our hallmarks is we are able to make these adjustments and be in a position to lead back out. So you got to stay true to that value model, stay focused on what you know will take you forward. And that's the key for us is making that right balance across the board.
Michael Roman there, 3M CEO. Still ahead, more on Facebook's redesign to be your go-to messaging app. Will users buy into it after all the social network's privacy concerns? This is Bloomberg.
Now look, I get that a lot of people aren't sure that we're serious about this. I know that we don't exactly have the strongest reputation on privacy right now, to put it lightly.
Now, Tesla reportedly will slash prices in a bid to regain its status as the top rooftop solar panel company in the US. Now, according to the New York Times, Tesla will announce it's selling panels and related equipment for up to 38% off. Customers will be required to buy online, and the electric car company says that will show that Tesla hasn't neglected its solar business. Now, let's get back to Facebook's F8 conference. And as we mentioned earlier, Facebook wants to make sure customers know it's serious about privacy. Now, the social platform unveiled a redesign that focuses on Groups feature of the main social network. The goal is for users to easily message one another and share news with members of private groups on the site. Facebook is also working to integrate and encrypt WhatsApp and Facebook Messenger. For more, I want to bring in Deborah Aho-Williamson of eMarketer, who is in San Jose for the F8 event. Your key takeaway thus far, Deborah?
Yeah, you know what? Mark Zuckerberg said it over and over again today. He said the future is private. The question I have, though, is whether the future of Facebook is private. And I think that's the question on everybody's minds that I hear at this event.
And so what do they really try to speak to in terms of making things private? Groups is clearly a key focus. How are they envisaging people are more willing to share information with a smaller, perhaps more like-minded demographic than the entire world and 200,000 friends that you tend to have?
Absolutely. Well, I mean, I think they're recognizing that times have changed. I think that people are not spending as much time posting check-ins and their updates on what they're doing day to day with a wide group of people that they're connected to on Facebook. They're really doing that in small groups with smaller groups of people, private messaging. These are things that Facebook has seen happening over the past few years, and now it's trying to pivot to take advantage of that, to say, okay, well, if you're talking with friends in private groups, we still want that to happen on Facebook. We don't want that to happen on some other platform or some other messaging app. So a lot of what Facebook has focused on today is the idea that messaging is important to Facebook, and they want to reassure their users that there is a place for them if they want to have private communications, that Facebook is the place to do that.
Yeah, because I find it interesting as a geographical reference point in the UK. I mean, everyone uses WhatsApp as their way of group messaging. I have most of my conversations with my close groups of friends and family is conducted via WhatsApp. Of course, they own WhatsApp as part of their overall platforms. What about the integration of WhatsApp with Messenger, with Instagram, for example? This is another key area of the encryption. And I was speaking to a key VP in the Messenger part of the business earlier, Stan Chudovsky, and he was saying this is going to take years.
Yeah, absolutely. This is something that Mark Zuckerberg also said. It's going to take a long time. This is not happening overnight. However, he's started to make steps in this direction. He really wants people to be able to use Messenger to communicate privately with people on Instagram or with people on WhatsApp or vice versa. So he's really trying to make it interoperable and encrypted at the same time so that people can communicate very easily across these platforms. And that's the really important message that he got across today, I think.
Is that good? I mean, for the broader community, for the investor base? Yes, I can understand that it'll make people want to use the platform that much more if there's privacy, but how, when you're in smaller groups, will they be able to advertise to you without putting you off?
Yeah, Absolutely. I apologize. It's noisy here, so I'm holding my earpiece in so I can make sure I hear you. So, you know what? I think that's the big question. I mean, he did not address advertisers today. He did not talk about how advertising would fit into this new vision of private messaging. That's something that I think we're going to be seeing in a later point. That leaves these open to a lot of speculation. Obviously, advertisers are very, very focused on advertising in the Facebook feed. That's the more public, the more open part of Facebook. That's where their advertising business and advertising revenues are going. So in order for Facebook to continue to grow ad revenues, it's going to have to develop ad products that do make sense in this more private environment. We've seen a few of them with stories and a few ad products in Messenger, but there's got to be a lot more for advertisers to continue their support of Facebook like they have in the past.
And what about Instagram? This is the part of the business that certainly the investor community is most excited about, the way in which they can monetize it. Did you hear anything exciting for the developers in terms of Instagram?
Yeah, I mean, I think two interesting takeaways from Instagram were the idea of the fact that they're testing this idea of private likes or private follower counts, things where it's not as public. And that really plays into this idea that maybe social networks shouldn't have focused so heavily on the idea that you have lots of followers, lots of fans, lots of engagement, that you should really just focus on who you are and not post just to be the person who has millions and millions of followers or millions and millions of likes. That shouldn't be a goal. Another thing that Instagram did announce today, but that I thought was interesting, was the idea of shopping for creators. Yeah. So this is an easy way for people to shop directly through the creator, buy on Instagram, all in one spot.
A great analysis and sum up of the day. We thank you, eMarketers Deborah Aho-Williamson, for joining us from a noisy F8. Now that does it from this edition of Bloomberg Technology. Remember, we're live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.